Hey, everybody, and welcome to today's real estate chat. I'm thrilled to have my good friend and partner, David Salvo from Nexa Mortgage, joining us today. David is a distinguished loan officer and lending expert. But before we dive into it, David, why don't you give the audience a quick little introduction and tell us a little bit about yourself, your business, and what really makes the difference between you and a traditional bank lender?
Yeah, sure. So thanks, Eric, for having. Like Eric said, my name's David. I'm a licensed mortgage loan originator. I'm licensed in both Florida and Connecticut. Currently, I live in St. Petersburg, Florida, but I spent most of my life in Connecticut, hence why it made sense to get the Connecticut license in 2024. And, a little bit about my business is, like Eric said, I'm a mortgage broker as opposed to your traditional brick and mortar bank. The benefits to that is I'm not constrained to a single bank's product offering. How that works is I have a network of over 200 banks and lenders that are competing for my business and the people that work at my company, each offering various loan products and allowing me to shop for my clients and find the best loan program product to suit their needs, and really get the best deal on the market for them.
Nice. And thank you, David. So now let's get into the nitty gritty of it. I know, obviously, myself included, and everyone else that's tuning in are really eager to learn more about this mortgage world. So let's kick it off with some questions here. So, David, what could you share?
There are so many loan products that are available to borrowers, right?
Right.
When you think of getting a mortgage, traditionally people are thinking about, okay, I want to purchase a primary residence, put 20% down, get a 30-year
Right.
mortgage, and that's the extent. But there are so many different products that are ideal for certain types of borrowers. There are a couple core loan programs that are a part of the government sponsored entity type. They're bought or sold as an end buyer, either Fannie Mae or Freddie Mac. So I'll just go through the main loan products. So the first one's going to be FHA loan. That's going to be ideal for, first time home buyers. And the reason for that is because the FHA loan has such a low down payment requirement. But with the FHA loan, you only have to put 3.5%, and then ultimately, slightly lower interest rates because of the subsidized nature of the loan product. Next is going to be the conventional loan. A conventional loan is good. Most people, when they're doing these types of loans, they're going to have to put down at least 5%. But rather the difference is in the conventional loan, if you put under 20% down, you have to get private mortgage insurance. But for the conventional loan, once you achieve a certain equity level, so paying down your mortgage, that PMI is going to be able to fall off. So that's a big plus for the conventional side of the loan program. VA loan is going to be the next one. This is a huge one for active military and veteran folks. So VA stands for Veteran Affairs. This loan comes with so many benefits for military people that, become eligible for it. And the biggest reason is that it's 0% down payment required, no mortgage insurance, and probably the most competitive interest rates available, despite only having to bring such a small amount down. Now, the purpose of the VA loan is the exorbitant benefits that come along with it is really to show gratitude for the brave folks that served our country.
Right.
Next one down would be probably the USDA loan. This is a unique product that's a good option for borrowers that are looking at, more rural areas of the country or the state. Your property has to be located in a certain area outside of a major city or metropolitan area. And it's really to incentivize developments through these rural areas. But there's a 0% down payment option. You can finance the closing costs. Other programs that will do down payment assistance programs, which really are built on these other programs, whether that's FHA or conventional. We'll do investment property loans, long-term rentals. If you were going to rent out just a single family home, we're able to make those happen. Short-term rentals like Airbnbs apply to that as well. Loans, ground up construction loan, build to rent type stuff. And then we'll also do like commercial properties, right? So if you're going to buy an apartment complex or something, even if you're going to buy like an office building, like things like that. So really the range that we have from like an FHA loan to a commercial property, that's like such a huge gap, but we're able to do that because we work with so many different lenders. That's for the eagle eye overview of the wide range of things that we can do.
No, thank you very much for that, David. Talk about a hot topic here that I know a lot of people are interested to hear more about. Let's talk about interest rates. So, can you explain a little bit the current interest rate environment and any factors that may influence rates that you believe in the near future?
Yeah, absolutely. Sure. So the interest rate environment currently is one of great volatility and uncertainty. It's important, though, to be realistic in terms of gauging where rates are headed, because a lot of us like to, especially in our industry, we like to try to predict where they're going to be. A lot of it can be hopeful thinking and speculation. At the end of the day, for us, we look towards the Federal Reserve and what they decide to do on a monthly basis. To give you a little historical context, 2022 and 2023 saw the fastest increase in interest rates in in just the longest time. It hasn't been that volatile in so long. But rates have since taken a breather since this past November, when the Federal Reserve decided to leave the federal funds rate unchanged and signaled that they may be done. So there's certainly chatter that rates may have peaked. But ultimately, at the end of the day, it's going to be up to the Federal Reserve and the bond markets to determine if inflation and unemployment data falls within their targets, and then they're able to adjust the federal funds rate based on that. They look at the consumer price inflation, unemployment numbers, along with many others. They'll gauge how hot or cold the economy is, and then adjust interest rates to either fan the flame of the economy or dampen it a bit to get into that 2% inflation target year over year.
Right. Would you say for aspiring home buyers out there, kind of dip to that a little bit, what documentation and qualifications are typically required, would you say, for a mortgage approval? And how can people improve their chances of a successful application?
Yeah. So the first step in purchasing a home, for those that haven't gone through the process before, if you're not paying for a home in cash, it's going to be to get pre-approved. And the pre-approval letter is from your mortgage lender, stating their certification of your ability to afford a mortgage up to a certain amount, indicating that you've passed preliminary underwriting criteria for a loan. And the reason that the pre-approval is so important is because when you submit an offer on a property, the seller has to make a decision of accepting or rejecting certain offers. And they don't want to remove a listing from the market if they don't have this documentation from a legitimate source serving as proof of funds that the buyer can, in fact, have a good likelihood of closing on the home that they want to purchase, which is the sellers. And then taking a step further, the pre-approval process, that it's really going to be dictated by, I have a document checklist that I send to clients. It's pretty standard. It encapsulates all aspects of the client's financial picture. The first one is going to be identification, simple as that. We need to make sure you are who you say you are. So we'll request a copy of driver's license, social security card. Next would be income. So we'd ask for copies of the most recent 2 months of pay stubs, and then your W-2 forms for the last 2 years. Next would be assets. So, we'll ask for copies of most recent 2 months bank statement to verify that you are in possession of assets needed to purchase the home, like the down payment, closing costs, and reserves as well. And then finally, credit report check. That's going to be done to retrieve the borrower's credit score and see what their monthly liabilities are and put that into our system. All this information where various calculations can be made and ran, and we're able to see which loan program you'll fit into, which program is best. And you have your file ready to go as soon as you go under contract on a prop there.
Gotcha. Thank you, David. So you gave us kind of through the loan origination process, pretty much from the key steps involving obviously from start to finish, or should I say from under contract to closing. So are there any common misconceptions or pitfalls that potential home buyers you think should be aware when navigating through the mortgage approval process or application process?
Yes, definitely. I guess a couple things that I would specifically highlight. The first one probably being that not all pre-approval letters are equal. We just talked about the pre-approval process. It's important that the loan officer that you're working with is actually verifying the information that you're giving them. Yet they should be using what's called automated underwriting systems or desktop underwriter in order to verify the file is within the program guidelines. This applies if it's like a FHA, conventional, VA, USDA loan, but that's a more majority of the loan programs. Making sure that your pre-approval letter isn't just, you went to a website, it popped up first on Google, and it had a little screen where you inputted your income and self-reported. And then you just said, my credit score is 700, and they give you a you're approved letter. That's not how you want to approach things, because you don't want to go under contract with something
Right.
like that unless you have gone through this preliminary underwriting process.
Right.
Once you go through the pre-approval process, which should include running your credit, right? Because things come up on the credit and we have to assess each situation. You want to make sure you don't open up any new credit accounts. It's super important. This means no applying for new credit cards, purchasing a car using a loan, or even using the buy now, pay later services, which have become super popular recently. So like Affirm, I forget what the other ones are. Those are loans technically. Even if it's for a super small amount, that's a big no-no. So doing so will impact your debt to income ratio. It could trigger an alert on your credit report. And if your debt to income ratio is really tight and you do that, you could put yourself outside of approval guidelines and make you no longer eligible for the home loan.
Wow.
So that's a huge one. And then lastly, I would say also being aware of HOA fees when you're shopping for a home.
It's a big
Because the monthly fee is used to gauge your ability to afford the total monthly payment. But once you're under contract, you want to make sure that, your pre-approval amount either included that, or if it didn't, then you're taking that into consideration when you're out shopping for a home. And if there's this extra fee, that's going to be a recurring monthly fee, that's going to have to be included in that debt to income ratio. And since it's property specific, you can't really estimate that up front. It's something that you have to be mindful about when you're shopping for a
right.
home.
No, thank you. Those are definitely some good pointers there. A lot I didn't even know, especially what's interesting is about the Firm, Afterpay, Klarna, places like that. So, piggyback on something you kept mentioning that last point, credit scores. I know they often play a critical role. I mean, one of the most important roles, of course. So, you think you can clarify sort of the importance of credit scores and the mortgage approval process, and maybe even give some people advice on how they can strengthen their credit profiles and make them better candidates for,
Yeah, absolutely. Credit scores, they're very important in the mortgage approval process. The higher the credit score, of course, the better your interest rate will be, the more likelihood you'd qualify for a certain loan. And it also indicates that if you have a higher score, you probably don't have issues on your credit report. Certain loan programs are going to have certain minimum credit score requirements, right? So that minimum is going to vary program to program. Credit reports reveal how much monthly payments that the borrower is obligated to pay every month. And this is why it's an important step in the pre-approval process, because it really gives us a good idea of, how much money you're making. That's the income side, the documentation side. But then the credit report tells us how much is this person liable for every month. So the higher the monthly payments that you have, the worse that your debt to income ratio would be. And that ultimately could, how high of a pre-approval you'll get. So if you have no debts, then you're able to maximize the debt to income ratio using your total gross income. But if you have good income, but you have a ton of monthly debts, that's going to put you a little bit worse off. So the same people making the same amount of money, but with different monthly payment obligations, could be qualified for vastly different pre-approval amounts. And then delinquent accounts, that's an important consideration as well. Late on installment credit, like auto, personal loans, or on a current mortgage loan, that can disqualify you right off the bat for certain loan programs, right? So you can have a 700 credit score, but if you had a late payment on an installment credit in the last 3 or 4 months, that could disqualify you from the traditional loan products where interest rates are good. Taking that into consideration, that's a huge thing. And just having a healthy credit profile all around is going to set you up for maximizing your pre-approval amount and ensuring underwriters that there's going to be less that will have to be nitpicked, and making the whole process, like I said, just easy.
That definitely makes sense. And then to sort of touch a little bit on something that you mentioned, because I know you mentioned costs and everything associated, obviously, with the mortgage. So apart from obviously the HOA fees and everything like that, and of course the principal and interest. Would you say are potential additional costs associated with the mortgage that borrowers should be aware of?
Yeah, for sure. Well, like you said, principal and interest, that's derived by the interest rate that you're getting, the loan amount that you're getting. But there's a good amount of other costs involved that people should be aware of when they're going through the process. So additional costs beyond principal and interest. It's going to be escrow accounts. If you're electing escrow, which most loans, there will be an escrow account. You could waive it, but it's definitely more common for escrow accounts to exist, and that's going to be for taxes and homeowners insurance. When you purchase a home, that's something to take into consideration as well. Property taxes are going to differ from property to property, county to county. Homeowners insurance, of course, that's going to differ as well. If you're in certain locations, closer to the water, maybe you need flood insurance. Underwriting is taking a look at the property involved. They're going to look at that stuff and make sure that insurance coverage covers the whole property amount. Property taxes are estimated properly. And then there's other like title fees, or any fee, any recording fees and transfer taxes. This is like a sales tax. A lot of the times the transfer tax is going to be in the thousands, right? It's a couple thousand and be part of your closing costs. So if you're purchasing a home, get an inspection. So an inspection is cost. An appraisal is going to cost, depending on the loan type. An origination fee could be involved for the lender, plus additional just fees that are encapsulated in closing costs. The smaller miscellaneous things that aren't super consistent, but can exist from property to property.
Right. I mean, definitely a lot of good pointers there. And it's true. There's definitely a lot of costs that people don't realize when going into the mortgage, but that's why we're here to make the process a little simpler. So, another thing
For
that
sure.
obviously now we're in a new year, 2024. Of course, it's an election year. So, obviously, a lot of big questions are in place. But for economic factors such as inflation or changing in the housing market, which is sort of when you have an election year, how do you think that would impact lending? And then, of course, do you have any advice for the average home buyer, anyone purchasing in these conditions, especially first time home buyers, which usually have, challenges than other typical buyers?
Yeah, absolutely. And the interest rate market it's so complex. There are so many things that influence what a mortgage rate is at a certain
Right.
time, right? Versus the federal funds rate, and the mortgage rate is based on a spread between those two. And then certain lenders are going to have slightly different pricing. If your credit score is slightly different. Um, so really at the end of the day, you just have to purchase the home because you're purchasing a home and not fixate so much on what interest rate am I getting today. So I've run into people that are fixated on shopping for an interest rate, and the rate might be like 0.05% better than this other one. And you go through all this extra work just to try to get that. And then the return on being super, super picky um, sometimes isn't worth it in the grand scheme of things. That's really just the key takeaway, especially if you're a first time home buyer. No, you're not trying to time the
Right.
housing market. No one has a crystal ball. We like to think that we know exactly where prices are headed, and everyone can take this optimistic view or pessimistic view. Some people are overly
Right.
pessimistic. It's really just important, figure out what is your goal? What life stage are you in? And then purchase the home and understand that you're either buying the home at a great time with a great interest rate, or you purchase the home and rates keep going down and then you just refinance. So purchasing the home today is really just a safe interest rate risk,
Right.
a safe route in terms of interest rate risk, because you can always refinance in the future. Taking the bigger picture view and understanding refinancing options in the future, that's going to be important as well. Depending on the program, refinancing can be as simple as not having to order an appraisal or showing income documentation. It's just based on the property and making sure that you would close over 6 months ago. Now, there are super easy refinancing options, FHA loans, VA loans. And that's the beauty of it. You just finance your rate down as the market goes down, but you still have the home already.
Right. Of John, what you're saying here with refinancing, because especially right now, given the current interest rate markets. So, what would you say are key considerations for homeowners? Meaning, when might it be a good time for them to refinance their existing mortgage?
Yeah, absolutely. So there's essentially two different types of refinances. The that's going to be your rate and term refinance or a cash out
Okay.
refinance, and both achieve different goals and are for different purposes. Most refinancing, when you think of refinancing, is done for the purpose of rate and term, meaning say you have a 6% interest rate and you're refinancing because the market interest rate is
Right.
5% now. So that's to lower your monthly payment. And so if you've purchased a home in the last year or so, depending on when you purchased it exactly, because it's been so volatile, you could be in a position where your equivalent vacation for a new mortgage would be a lower rate than what you have today. And taking into consideration the closing costs that might be involved in a refinance, you can work out if it is advantageous or not. For most people, you might see, in the next 12 months, significant refinancing opportunity and lowering your monthly mortgage payment by a couple $100 a month. The other one is if you have a lot of equity in your home, doing a cash out refinance. So the refinancing that you get, you can only do it up to, typically it's about 80% of the total market value of your
Right.
property. So say you have 50% equity now, that means you can extract 30% of the equity in the home and use those funds for an addition on the home, remodeling, really anything of that nature. So that's another, huge benefit of refinancing and really seeking it out when it makes
Right.
sense.
Of course. Thank you again for that. So as we're kind of coming to the end here, David. So you say to everybody, looking ahead, obviously the financial landscape and I guess the market in general is obviously rapidly evolving, right? So how do you see that affecting your mortgage lending? How do you see it evolving? And then I guess give any last piece of advice maybe to people that are tuning in looking to make a home purchase or make some movements in 2024 and beyond.
Yeah, for sure. And I'd add, right, the financial landscape is
Right.
certainly changing, but also the technology landscape
Oh
is
yeah.
changing as well. One of the crazy things is I'm able to be licensed in 2 states 1,000 miles apart and still, operate a business because all of this stuff can be done virtually over the phone, over email, the applications that we're able to use. And once the person is under contract, it really just makes things so much
Right.
smoother, right? So it's such a different time compared to the having to go to a bank and then sitting in the waiting room, waiting for a banker to come bring you into their office and then go through all those unnecessary steps to apply for a mortgage. You can do it as simple as, giving me a call and then just giving me information and I come back and ask you some more questions and give you preliminary information and then I'll come up with a pre-approval. And it can take just a day, just from you being at home and myself, at my desk. So that's the interesting thing about a lending market, mortgage lending in general, just evolve. Financial landscape, it's really hard to time the market with this. Unless there's like clear data that directionally Federal Reserve is deciding one way or another, but they're data dependent. So the data that make their decisions on, that's put out publicly monthly, and we stay on top of the things that the economic factors that are put out and make guesses based on that. If you're a first-time home buyer, I can give you the lowdown of how everything works: mortgage spreads, federal funds rates, at loan level pricing adjustments, all the nitty gritty. But at the end of the day, we are at the whims of the Federal Reserve and what they decide. So for a buyer, it's really just, does your situation make sense where you're now in a position at your life stage that you're ready to purchase a home? And if you are, then, explore options and see if it makes sense. And keep in mind that refinancing is always a possibility in the
Right.
future.
I think that's what's most important just now or just in general. I think everyone tries to always focus when's the right time, when's the right market, but really it's obviously when's the right time for you, right? Is this the time right now where you need to make a change, make a purchase? If not, let's get the plans in place so that we can get that done for you and make it a smooth and easy transaction. But once again, David, thank you so much for coming on here, sharing your expertise, shedding a little bit of light for us and everybody, including me, on certain aspects on mortgage lending, the mortgage process, and maybe a little bit of everything in general that maybe not too many people are too knowledgeable about or know about, but it's good that we got some of those insights here. So I want to thank you again. Thank you for everyone that's tuning in. And as you can see here on the screen, we got all our information. Here's David's info. And then here's my information here so that you can see everything that you need here to reach out. You have any questions, let us know. Get in contact with us, and we look forward to helping you in 2024 and beyond. Thank you once again, and tune in next time for our real estate chat.